Welcome back to SmartWealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Well, Dave, I got to tell you what, right out of the gate, we have one of the best guests that we've had in our studio in many, many months. His name's David Morgan, and he is the Silver Guru.
Yes. And the neat thing, Steve, he's agreed to come back this fall because we know when we have something exciting that people are going to really enjoy listening to.
You bet. And we've already scheduled an opportunity for him to be back in the studio with us. It's intriguing now to recognize what's happened over the centuries to currency and money. And money and currency are not the same thing. Here in America, we now have fiat currency.
Right.
And it only has the value that we subscribe to it, that we have chosen to give it. And, it's printed right on our dollar bills that they can be used for all debts, public and private. And you have to take it for debts. You know, if somebody says, I'm not going to take this currency to pay off this debt, the debt actually goes away. A lot of people don't realize that. Isn't that fascinating?
Yeah.
Better remember that one in the future if we find ourselves in some troubling times. But our guest today, David Morgan, was one of the featured speakers on a feature-length documentary movie done in England. It's called The Four Horsemen. And if our listeners would like to watch a full-length version of that for free, simply search on the internet for The Four Horsemen, and you'll find David Morgan as one of the speakers on that movie. And there are fascinating quotes that I picked up out of the movie. Of course, many of our listeners already know that Voltaire has said, all paper money eventually returns to its intrinsic value, zero.
Mm-hmm.
Now, that's what it's worth. And the phrase, it's not worth the paper it was printed on, that actually was a phrase that became popular back in the Revolutionary War because they were giving the soldiers script, and the script wasn't worth anything. The people in the town, you brought script in, and they would go, well, no, you can't buy food with that. You can't buy lodging. I'm sorry. And so it wasn't worth the paper it was printed on. Well, in this movie, The Four Horsemen, it blames the so-called neoclassical economics of Reagan and Thatcher for the greed of Wall Street and the eventual collapse of the real estate market when the housing bubble burst and investment banks demanded nearly $1 trillion in bailout money. But candidly, Dave, there are other economic schools of thought. One of the things that our listeners have grown accustomed to hearing is our education about the Austrian School of Economics. And David Morgan is a strong Austrian economist. He agrees with you and I, Dave, that we should not build our economy on debt. And I am a Reagan conservative from the get-go. I mean, Reagan's policies are like,
right.
Food for my thought. They just are what I built my whole adult political strategy on. But the reality is that we have too much crony capitalism. And our listeners know that crony capitalism really means giving favor to people that should have earned it. And you don't get stuff for free. You shouldn't get stuff for free. And we shouldn't see these big bailouts for investment banks or for corporations that are supposedly too big to fail and too big to jail. Our goal is to work with our clients and to make sure that their future is safe and secure. And we don't like to see thievery on Wall Street. We are not proponents of the profit of companies that are profiting in such a way that it harms other people. If you're providing a good or a service that lifts mankind and the free market economy buys it because it's the right thing at the right time, at the right price, great. That's the kind of profit you should earn. But to do things like naked short selling, where you're selling something that you don't even own, that doesn't make any sense. It doesn't make sense in a practical sense. It certainly doesn't make sense in an economical way. So we are very much looking forward to having David Morgan on the show, and we've got a ton of questions that we want to ask him, and we will ask those right after the break, but we want our listeners to know that they can also call in right now for a copy of David Morgan's book, The Silver Manifesto. Call in to 509-32-SMART. That's 327-6278. We'll see you right after the break. Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Well, if you hear something, and I think you will today, that you're interested in and that causes you to say, I got to learn more about that, make sure you call us at 509-32-SMART. That's 327-6278, and we'll make sure and get the information back to you that you're requesting. Well, as promised, we have as a special guest today, David Morgan. He is the author of TheMorganReport, a e-newsletter. And he also gives a personalized coaching to folks that want to invest in silver or gold or mining stock. And we're very, very pleased, David, to have you in the studio today. Thank you for being here.
Oh, that's a pleasure to be here. Thank you for inviting me.
You know, one of the things that Dave Altmaier and I do on our radio show is to make sure that people understand that if you have all of your money at risk in the stock market, then you're really not diversified. So we strongly believe that it's wise for people to spread the risk out over future income streams, and stocks, bonds, commodities, whatnot. And Dave and I live in the world of the brick house, so we are the safe future income strategies. But we also recognize that many of our listeners have a very strong interest in learning more about these other kinds of investment strategies, real estate, etc. So just right out of the gate, David, why would our listeners be interested in hearing what you have to say about investing in silver or gold or precious metals of any kind?
Well, first of all, if you go back into history and you look at, what monetary system has survived, it's always been the precious metals. I mean, this is what the free market is determined to be money. So there isn't really one paper currency on the planet that's really gone much more than a couple hundred years. So you're saving in bonds, you're saving in a bond of a corporation or perhaps a government. It could be the U.S. government, it could be the Bunds Bank, it could be the United Kingdom, it could be whatever. But the long tail of the situation with the monetary system is that it's always broken down when it's based on an interest payment that cannot be given into the indefinite future. So let me restate it slightly. Compound interest, as Warren Buffett has stated, is like the eighth wonder of the world, and it truly is. However, at a certain point, it goes exponential. And one of the failures of mankind is to understand the exponential curve. And because you can compound at a certain rate, it gets away from you at a certain point in time. And actually, we have reached that point in time with the United States debt and many other countries around the world. So because of that fact, you need to hedge your bets. I'm not saying the stock market's good or bad, but the most negatively correlated asset to the stock market is gold. Nothing moves more strongly opposite to the direction of the stock market than gold. Now, notice I said gold and not gold stocks. Gold stocks are stocks, and they generally move with the stock market initially if there's a crash or correction, or depending on what the economy's doing. They sympathize as stocks, at least initially. Whereas gold is a safe harbor asset, a safe haven, if you will, and that has a propensity to go the opposite direction. If you go back to the 2008 financial crisis, gold did sympathize with the general equity market and the bond market, and of course the real estate market with the subprime mortgages. But the first one out of the gate to turn around were both gold and silver, and they went strongly north when everything else was still wallowing around and not doing very well. So that's my answer. It's an asset that goes the opposite of the other two.
Now,
stocks and bonds.
The reason I've heard that it goes down initially with the stock market is a lot of hedge funds or funds hold it and they dump the good asset first. So they dump it and there's nobody there to buy it because there's lack of liquidity. And then when people have the liquidity, then it takes off.
I think that's exactly right. I mean, this has been shown time and time again, whereas a fund manager, they're always leveraged. And so they look at what they have that's in the positive zone. It's usually gold holdings of some type. It could be the GLD, or it could be a gold mining company, or it could be whatever, but it's gold related. And that's the best of the worst. So they have to liquefy that. It's the most liquid. And certainly if it's all sell orders and very few buy orders, it is going to go down in price. But again, it will pick up, or has, at least history has shown, picks up much sooner than the other asset classes because it's a different asset. It's really outside of the system, if you will, especially a gold coin, for example. There's no broker, there's no counterparty risk involved whatsoever.
Well, if our listeners are just joining us, we have as our guest today David Morgan. He's the publisher of The Morgan Report. He's also appeared on CNBC and Fox Business and BNN in Canada. He's also been interviewed Wall Street Journal, Futures Magazine, Gold Report, and other numerous publications. And he has a book here in the studio with us today. In fact, I see several copies. We're going to be giving away a copy to the first 3 callers. You need to call in to 509-32-SMART. That's 327-6278. This is a book that David wrote with Chris Marchese. It's called The Silver Manifesto. So if you listeners have an interest in investing in silver or silver stock, this would be a great time for you to call in 32-SMART. That's 327-6278. So before we take a break, David, give us a little bit of your history. I mean, how did you become the silver guru?
That's quite a story. Before I move on, it might be best to let the audience know that although silver is my specialty, the Morgan Report, our monthly financial publication, looks at money, metals, and mining. So we look at the resource sector as a whole. So we do a lot of things outside of the silver and gold industry itself. But I was interested in money as a kid, and when I was 11 years old, we went from what I call the 90% silver backing, or silver coins, dimes and quarters, half dollars, to what I call the Johnson slugs, and that happened in 1965. And even as a kid, I realized that these 2 quarters that I had just couldn't be the same. One was like something that looked silvery with copper in the middle of it in a sandwich form, and the other ones that I had collected from doing yard work were pure, were 90% silver. So it struck me, but it seems that none of the adults really noticed it. And that was just kind of the beginning. That certainly didn't start off my fire in the monetary system thinking, I'm going to be the silver guru. And of course, I say that with tongue in cheek. But that was a start of my quest about what is money and why did it change? That was my question. So that kind of stayed with me for quite some time. And then, of course, as I grew older and got into finance and went about learning about the stock market, et cetera, just one thing led to another. It's just been a passion. It really is. And still, you can probably feel in my voice, something that I still get up in the morning thinking about it. And I like to teach about it, and I like to make my living talking about the markets in general, but particularly the precious metals.
Well, we're honored to have you here. And listeners, if you'd like to get a copy of David Morgan's book, The Silver Manifesto, make sure you call in 32-SMART. That's 327-6278. And we have a ton of questions for David today, and we'll cover those after the break. Welcome back to SmartWealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. Well, today we're learning to be smart about silver investing and perhaps gold or precious metals or mining. We have as our guest, for those that have just joined us, David Morgan. He is the publisher of The Morgan Report. It's a monthly e-newsletter. David has several copies of his book, The Silver Manifesto. We're giving those away to the first 3 callers. We have a limited supply of these, so we're only giving these away to the first 3 callers. But make sure you call in now, 32-SMART, that's 327-6278, or you will miss out on your opportunity to get a copy of these books. Well, David, I've got a lot of questions in the mailbag here, and one that has come up is, you seem to favor silver rather than gold. Now, is that true, and why is that true?
Well, basically, I like both precious metals. In fact, what I've taught from the beginning is that if you have a precious metals portfolio, and again, I want to go back that, this is an overall strategy for a portfolio. I've never been one to say, guns and gold and groceries, that's the only way to go. I think it should be diversified throughout the sector. I think there's a place for all asset classes. I think most people over-diversify. A 10% allocation of the precious metals is probably enough for most people. But if you're really, really concerned about the economic conditions worldwide and you want to up that, I'd say 20% is probably more than enough. And if I can digress just a moment, if you go back to Ibbotson and Associates of Chicago, they did a portfolio analysis about 10 years ago when they looked at all asset classes. And what they discovered was that precious metals, not mining stocks, but precious metals themselves, were the best thing to have through all economic conditions. Let me repeat that. Through all economic conditions, you got a better portfolio strategy and better returns by owning precious metals. The allocation that they recommended is right between the two I just gave you. They recommended 15% into the precious metal sector in current economic conditions. So I come back. Gold is really a way to preserve wealth. I mean, gold over a long period of time holds its value. Certainly the price goes up and down, and sometimes it's overvalued and sometimes it's undervalued, just like any asset class. But over a long period of time, gold usually maintains its purchasing power. Silver, on the other hand, is a much smaller market and much more volatile. Silver can make you wealthy, or it can also put you in the poorhouse if you use too much leverage with it. So I like a balance between silver and gold. I think it's like investing in the stock market. You could think of gold as being a stalwart in the blue chips of the Dow Jones, and you could think of silver as being one of the up-and-comers in the NASDAQ. That's probably a pretty good analogy between the two metals. So if you're young, you're aggressive, and you want to make, want to play it that way, certainly you could favor silver over gold. If you're older, wiser, and you've had your hard knocks in the investing field, you might favor gold more. I think if you're gold only, you're missing a chance of silver to outperform gold, which I really think it will happen in the next leg up in the precious metals. But nonetheless, I don't tell anybody exactly what to do because one size doesn't fit all. Everyone's got a different risk-reward profile. So the summary of it is I like both metals. I teach that you should own the precious metals, the metals themselves first. And once that's accomplished, then you can go into top-tier, unhedged, cash-rich mining companies, go down into the mid-tier, and then we certainly do speculations as well. But like most newsletter writers, I am different. I do not spend much money in the speculative sector. We say bet money you can afford to lose. It's a bet, not an investment. And we keep big money into big companies, and because of that, we've actually done quite well, even during these very trying times for the commodity sector.
Before we move on, what is the best place to buy silver and gold and to find the right price?
Well, there's several ways to do it. I mean, with the internet now, you can certainly just get on the internet and type in, buy silver, buy gold, and you'll get a plethora of different kinds of dealers. In fact, there's a website that was built by a friend of mine, and it used to be, it may still be there. It's called Gold Shark. I don't know why he came up with the name, but it's goldshark.com. And you put in what you want. So if you want to buy like Silver Eagle, you put that in the window, the search window on that website. Not talking Google now. You're on goldshark.com, and then you type in, Silver Eagle, and it'll compare all the prices for Silver Eagles. And I'll give you what the price is for one roll, for one box, and that kind of thing. Basically, I have a program that I'm an affiliate of called silver123.net, and that instills discipline. To me, silver and gold are real money and have been for thousands of years. It's a hedge position. It's something that everyone should have, but you don't need to overload in it. And this program, silver123.net, is one where you allocate a certain amount every month to buy gold or silver or both. You can allocate it how you want. And it instills things that I teach. One, a dollar cost average you into the market so you don't get all emotional whether you pick the bottom of the market or not. You have a long-term perspective, and it's something that once you set up, and it takes about 10 minutes, it just goes on until you decide to stop. And it's very flexible. Let's say that you get a raise at work, or you come into a windfall, you could add to it if you wanted to, or let's say things are a little rough for you and you want to stop for 6 months, you can do that. It can be stored, but the company does send you the metal right away if you choose to do so. So it's something, again, that I'm affiliated with. I participate in it myself. They do not do any real mainstream advertising. They rely on the fact that they have such low premiums that you are going to be happy about the program, pass it on to your friends and neighbors, that type of thing. And that's how they basically get their advertising. And because of that, it gets even better. They do offer an affiliate program. So if you are going to use your mailing list or tell somebody about it, you can actually get a little bit of a premium. And I do mean a little bit, but still can add up over time. And it's something that's not a multi-level marketing system. It's just strictly dependent upon what you do on your own effort. So something I like, something to consider. Mm-hmm. If there's a big purchase or something like that, and I've had those, of course, and I don't sell bullion, but I do consult. I've had some very interesting people over the years consult with me to buy silver or gold in size that want it in a certain location and that type of thing. And that's an individual case-by-case basis, so I really can't go into on the radio, but I do give that type of information if you require that. And that's not many people, but occasionally those situations do arise.
For the listeners that have just joined us, we have David Morgan, the self-proclaimed silver guru. And I think that's a good thing to proclaim, David. I think that makes a lot of sense. Having listened to you, I would call you the guru, and, that makes good sense to all of us. So what is a correct exposure to silver and gold, and why?
Well, I've been asked that question before, and I actually was asked to write in the Investing Rules book. It was a United Kingdom publication, and they had such notables as Sir John Templeton and many others of that class. Certainly, I wouldn't put myself into that category. But they asked different experts through mutual funds, mastered limited partnerships, mutual fund investing, and on, and they asked each one to write their 10 rules. So when it came to silver, they asked me. And the last rule, I said, too much of a good thing could be too much. And 10% allocation to the precious metals is probably enough for everybody. And later I revised that. This is before the Gulf War won. And I said, the way things are going with the war climate and the uncertainty in the economic field, we might be looking at upping it to 20%. But I say 10 still is probably the best for most people.
Good advice. Well, if you'd like to get more information, make sure you call us at 32SMART. That's 327-6278. And you can also send me an email if you have questions for David Morgan. That would be steve@smartwealthradio.com. Again, that's steve@smartwealthradio.com. And if you just turned on the radio, you now know that you might be able to get a copy of David's book, The Silver Manifesto, but we are giving the book away only to the first 3 callers. That's 32SMART, 327-6278. If you're outside the Spokane area, be sure to use that prefix 509 32SMART, and we'll be right back after these important announcements. Welcome back to Smart Wealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. We have as our guest today, David Morgan, and fascinating information that he's giving us about precious metals. When we were just off the air during the break, Dave Altmaier, my co-host, was asking David some questions. I said, wait, let's wait till we're back on the air. So Dave, go ahead and ask him.
So I heard at the end of last year that countries were repatriating their gold at a record amount. Can you speak to that? Is that true? And why do you think that might be, if it is?
Well, that's a mouthful, and I'll probably go through the rest of the show, but I'll try to be succinct, which is tough for me, but here it goes. First of all, if you look at monetary history, which is something that's fascinated me from an early age, the old adage of the golden rule, he who owns the gold makes the rules, is really true. If you look back in modern history and you go to who, the sun never set on the British Empire, and when they, quote unquote, that empire, quote unquote, ruled the world, they had the most gold and the most commerce. And during their decline, the United States came to the fore with the most gold and the most commerce. And now we see gold shifting to Asia, primarily to China, although it's going into India and Russia as well. And certainly China is number 2 or number 1 recently as far as providing the most commerce. So the idea is that gold, even though the bankers play it down and negatively discuss it in the mainstream media, it really is the one asset that isn't a liability to anyone else in the monetary sphere, and they really do covet it, even though they pretend not to. I want to go a little bit further and explain the most important way to think of it is if you think about the Bank of International Settlements. The BIS is the banker's bank. And if you go back as far as just maybe a decade or a decade and a half ago, when they did the accounting for all the major banks of the world, they accounted in one way and one way only, and that was their gold holdings. They didn't care about foreign exchange. They didn't care about the bonds held. They didn't care about bank-to-bank swaps. They didn't care about interest rate loans. They didn't care about anything but gold. That tells you a lot. Now, they stopped that quite some time ago because if you listen to the whole show, you realize what I said about people not understanding the exponential function and what happens on compounded interest rates that cannot be sustained forever. Bankers know that as well as anybody. That's part of the reason we have the zero interest rate policy, but I digress and come back. So what's happened is, going with the BIS statement, is these countries have woken up and say, you know what, if you're holding my gold over at the Federal Reserve Bank in New York, I want it back. I want it because gold is gold and nothing replaces it. So this has been happening, this repatriation of gold from Venezuela. They got their gold back. Germany has asked for their gold back. Texas, for their pension fund, has asked for their gold back. And there are many other examples of places, people, hedge funds, and countries that want to put their hands on their gold. And this has caused a problem because there are so many paper claims, and it's a fancy word. All it means is there's multiple claims, but it's hypothecation and rehypothecation has taken place throughout the asset classes, through derivatives in every sector, stocks, bonds, but especially in the precious metals. And this is causing a problem because there is more gold on paper than there is physical gold. Countries are aware of this. Hedge fund managers are aware of this. People, particularly, especially the gold and silver bugs, are very aware of this. And now we're starting to get an actual accounting. I don't want to see a certificate that says I have gold. I want the real gold. So this is what's happening. It's the start of a gold run.
About 18, 19 months ago, Germany requested that Fort Knox return their gold. And they were told, no, we can't give that back to you right away. And then they said, well, can we at least see it? Nope, you can't see it right away. And then a couple of months later, they were given back their gold and in the right amount and weight, but it wasn't their gold. It would be like you going off to Iraq in the military and you leave your Camaro with your younger brother. And when you get back, well, it's the right year of Camaro. It's the right color. The interior looks the same, but the VIN number is different. And you go, well, where is my Camaro? Well, that's your Camaro, older brother. Not really. There is a story behind that. I don't know what the story is, but why is it that Germany couldn't get back the gold that was uniquely marked with their national symbol?
Well, a couple of things to add on to you, Steve. First of all, it was the New York Fed. And then also the Bundesbank said, or Deutsche Bank, I think it was, said, well, we'll give you 7 years to bring us back our gold. Now, this, to me, this is my speculation, so please don't take it as fact, that these bankers are sort of in bed together and it's sort of wink and nod and say, well, you know, we've got the gold certificates and over time. So they agree to take all their gold back over a 7-year time frame. But the first payment in gold did come through, as you said, Steve, exactly like you said. And the most important point is that it wasn't segregated. Segregated means that Camaro example is segregated from all the cars in the lot. And when I come home, that's the only Camaro I'm going to get. That's a segregated account, and that's what they're supposed to have, but that's not what happened. And why? As I go back to what I said earlier, this swap, this rehypothecation, someone probably used the German gold for a loan and then swapped it to another bank, and it got lost in the food chain, so to speak, and that gold cannot be determined as far as who owns it. So gold is gold, and I don't have a problem with that unless the contract says it's segregated. and then they can't produce it. That's a big problem, which is what is indicated here. I don't want to speak for Germany because I haven't seen the actual contract myself with my own eyes. The point being that they didn't get back what they put in. They did get gold back, and it's a minimum amount, really, compared to what they actually own. What the Fed holds for them is not, it's substantial, but is certainly not all of their ownership. But it really makes me wonder, why can't they, one, see their own gold, and two, get it back in a timely manner? Why have they agreed to take it back over a 7-year time frame in today's world, especially with everything that's going on with the euro? Are you kidding me? This begs further thinking and further questions, in my view.
I want to say something about gold, because you see these movies and they got these gold bars all over the place. But as I understand it, if you take all the gold in the world and put it together, it would fill about the size of an Olympic swimming pool. Is that correct?
3, 2.5. Yeah. The thing about gold that most people don't understand is the value. Now, when I was very young, once upon a time, and I bought silver, I bought gold, what most people don't realize, and this is an example, they have the absolute upside down idea about gold. They think that, if they're going to cash out all their wealth and put it in gold, that they're going to have to get a great big crane and get all this gold around. What they don't realize is that most people's net worth of everything that they own, houses, cars, automobiles, everything they own, could be put in their front 2 pockets and walk down the street if it was in gold coin. That's a truth. It was rather amazing to me when I first bought gold, because I went in, gold was about $300 an ounce at the time. I walked into the coin shop and I put in like $8,000, and I forget how many coins, you could do the math. But, I got a few gold coins, and this gal next to me was a little older than me. And the coin dealer said, look, and he put out a stack of 20 gold coins, and he said, that is a brand new Chevrolet. And then he put another stack of gold coins next to that, and he said, that is a Mercedes. And I'll never forget that as long as I live, because it was impacted me so profoundly that, again, you could put that in your front pocket, walk down the street, and you're carrying a Mercedes-Benz in your front pocket. Most people think that you get a lot of gold. No, you get a small amount. Why? Because it's precious. Look precious up in the dictionary. It's something that is just that. It's scarce, it's rare, it's hard to find. And as you said, Dave, all the gold in the world melted down would cover about 2.5 Olympic-sized swimming pools. I like to think of it like this. You think about how much oil there is in the world. So just go and do a thought experiment. You're on the moon, you got a big telescope, and you look down on Earth and you see how many gas stations there are. You would see quite a few gas stations. Uh-huh. But if you thought about it, you could hide all the gold in the world under about 5 gas stations of the entire planet. So that gives you a conception of the commodity oil versus the commodity gold, as far as how rare it is versus a commodity that we're all very used to, which is oil.
Great stuff. Hey, we're going to learn more right after these important announcements. Welcome back to SmartWealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. For those just joining us, we have in our studio David Morgan. He is the Silver Guru, and he was also a featured individual on the 4 Horsemen. So if you'd like to learn more about that, it's a feature-length documentary called The 4 Horsemen. Just go ahead and Google that, and I'm sure you'll find that about an hour and 20-minute movie. And David was featured on that, and really enjoyed the stuff you had to say, David. It was profound. In fact, one of the things in particular, you said, you can never get enough of what you don't need. It's almost like a drug, isn't it? Gold can be that way, can't it?
Yeah. Well, gold can, but what he meant by that, and it can be taken any way you want, but, I meant it in the paper money realm, or I meant it in our society at large, that you can never get enough of what you don't need. What we really need is more balance in our society. And these are my views. These are my opinions. So, take them or leave them. But you're asking me in the studio to give you my views. But I think there's a lot of imbalance in the world. You look at the West, it's probably too materialistic. You look at different sectors of society, everybody's vying for their own pet program. And we haven't gotten back to basics. So the idea being you can never get enough of what you don't need, as a real corny example, a woman with shoes. I mean, how many pairs of shoes do you need? But they're always buying more, look better for this party, that party. I'm not trying to make a case about women. That's not my point. My point is that you can never get enough of what you don't need. So we're going to get back, I think, to what we do need. I mean, you look at what's going on in the agricultural markets. I studied the commodities pretty carefully, certainly in metals more than any other sector, but a lot's going on in the food supply chain. And I don't want to digress too far, but that was the point. It's get people to think. One of my main premises from the get-go was to get people to think. You don't have to agree with me. You just have to think about these type of things that we all are really concerned with. And money transcends religion, sex. It transcends, where you were born, economic upbringing, whether you're rich or poor. Everyone's concerned about their money. So money is something that is pervasive throughout cultures worldwide. And because of that, you can speak on that topic. The problem is most people don't even understand the difference between money and currency.
What are your thoughts about silver market manipulation?
Well, this is a question that could take hours to address. So I'm going to give a shameless plug for my book, The Silver Manifesto, because I go into great detail about the manipulation in that book. So the first thing that people have to understand, and many on the show are familiar with it, and that's what fractional reserve banking is. And once they understand what fractional reserve banking is, then they can have a very good understanding of how a bullion bank operates, because it's the same principles where they use, again, going back to my favorite word, hypothecation, where you can have an ounce of gold and you can rehypothecate it like 100 to 1. You can have 100 different claims on that gold, either in the future or swap with somebody else or use it as a loan, as an asset against a loan and that type of thing. So the book goes into those two things, and then with that foundation, you can find out how markets are manipulated. So let's just take a brief example that I think most people can understand. Mm-hmm. For a very long time, the market is controlled by supply and demand. And so you'd say, well, there's only this much silver, and there's this much supply, and there's this much demand, then obviously the price will be determined in the free market, and it'll be settled at the correct price.
Right.
True if and only if the supply wasn't supplied by paper. Let me explain. The commodities sector as a whole is set up so favorable to the shorts or naked shorting. What this means is being able to sell something you don't own. And it's not only true in the silver and gold markets, although it's more pervasive in the silver market than any other commodity by far. And that's been proven time and time again. But you're allowed to sell basically an infinite amount of silver. Now, that's against the rules that are on the exchange, but the exchange seems to look the other way all the time, even though it's been pointed out to them numerable times that you are exceeding your own published limits. They just give a big yawn and say, tell somebody who cares. That's my interpretation.
And keep paying your fees to us.
And keep paying your fees. So if you look at it that someone puts in a large order to sell, and they're going to sell like a half year's worth of silver supply, why would anyone do that? They would only do that for one reason and one reason only. Everyone knows that markets move at the margin. So let me digress a bit and explain that, because I'm sure the listeners know, but there's somebody new out there learning about money, so they need to know this. So it's the last bid at the auction that gets the Rembrandt, or it's the last bid at the auto auction that gets the car. That's the margin. Someone's willing to pay $2,500 for that car, and no one wants to pay more than that, and all of a sudden the last bid comes in $2,550. That's the margin. That's what moves the market. So people that have the idea when they look in the paper, like I did when I was a 12-year-old kid, and they saw a certain stock that they liked, and they saw it traded in the 52-week high and low at $1 and $10, they thought, I could have bought this much stock at $1, and I could have sold it all at $10. No, that's not how it works. Once you started buying at $1, any volume at all would start to bid the price higher and higher. And the same thing on the sell side. If you tried to sell all of that stock at 10, it would drop the price. So this is the basic function of how markets actually work. So coming back on point, if you're going to sell half a year's mining supply, you're going to drive the price down and drive it down substantially, but you're not talking real physical silver. And so the market has an oversupply of paper, and that adds to the supply because a very long time the market doesn't care. In the futures market, only about 1% is ever delivered. So 99% of the time, it doesn't matter if you're selling paper or not, it's in your favor. On the other hand, if you want physical delivery, it's a strict, hard limit. you are only allowed to get 1,500 contracts, which is 7.5 million ounces of physical silver. So you can sell as much as you want that doesn't exist, but if you're going to take it and want the physical, you're limited to 1,500 contracts.
David, comparing gold and silver, the price of gold is really interesting right now. But silver is even more unique because you can buy it for about $15 an ounce, but it costs $20 to $22 an ounce to mine. And I know that you also work in the mining sector. Can you give our listeners some kind of an idea of what's going on here?
First of all, the commodity sector has been decimated here recently, and the overall cost to mine an ounce of silver is around $21, $22, and that was as of, 8 months ago or so until the oil prices fell. The energy sector is very important to the mining industry. It's about 25% in most cases. So because oil has come down in price, the break even for many of the silver miners is now like about the $15, $16 level. So they're basically break even. Some mines, of course, are underwater. Some, such as Tahoe, are making a profit. They can mine all in sustained costs at about $11 an ounce. But what's really going on is the market has been hard hit. I think that a lot of it has to do with what we just described as far as what happens in the paper markets. This is across the board in the commodity sector. But if we just take a step back and take a deep breath and look at what is and not why it got there and leave the why question out and just examine what is, what we determine is that the commodity sectors has fallen a great deal. And what that implies without any added emotion is that there is a less demand. In other words, we're in a recessionary environment, or even perhaps some would argue a depressionary type environment on the globe. And that is something that's really hard for the mainstream press to say, oh, recovery, 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 even though certainly if you look at it on a financial basis, there's a strong recovery. But if you look on a physical economy basis, there is not a recovery. So there's been a big disconnect. The financial markets used to reflect the physical economy quite well. If a business did well, you shared in the profits, stock prices went up, dividends went up, everybody was happy. Those days are long gone in my studied view. We now have a stock market, look, everybody's jumping up and down and talking about the numbers, but it doesn't really reflect what the physical economy is doing. So commodities are what we need. Stocks, we in some cases need or don't need, and I don't want to get into an argument. What I'm saying is commodities are what we need. That's the basics, and they're down in price, and that indicates a slowdown in the global economic system.
Mm-hmm. I read something this morning that the price of commodities right now are mirroring what they were doing in 2008.
A very good point. We are in a situation where we didn't learn our lessons. I want to digress back to the movie, The Four Horsemen. And again, if you want to see the movie, just Google in The Four Horsemen film, and you will get it for free. You can watch it for free now. But I made a statement in there, which is a quote, and speaking the truth in times of universal deceit is a revolutionary act. And that's the world the way I see it today. That is a quote by George Orwell. But what's going on, as you said, Dave, it's something that we're all questioning at this point in time. The world doesn't, 1 + 1 doesn't equal 2 anymore. We're in this situation now where up is down, black is white. Everybody's glued to their personal device and looking for answers or looking at trivia and stuff that really doesn't matter. And again, it goes back to earlier in the show where we talked about balance and what it really means to be human. So we've lost a great deal of our humanity, I think, chasing the wrong things. And I think the shakeout that's going to happen, and I really believe that it will, isn't the end of the world, doesn't mean anything other than we're going to all be asked in our own collective consciousness what really matters and what really doesn't matter. And we're going to get back, I think, to a more basic, more understanding, and a richer way of living. And I mean rich not in a material sense, but I mean really understanding what is valuable and what is not. I think we've tipped the scale too far one direction, and I think it's time for it to come back the other way.
Yeah, that's good.
Good time to take a break. We'll be back right after these important announcements. Welcome back to SmartWealth Radio with Altmaier and Minnick. I'm your host, Steve Minnick.
And this is Dave Altmaier.
And this is the show where you're learning to be smart about the health of your wealth. And speaking of getting smart, we have a book here that was written by David Morgan. He's in our studio today. The book is called The Silver Manifesto. And if you'd like a copy of David's book, make sure you give us a call, 509-32-SMART. That's 327-6278. So, David, when did you write this book?
That was a 9-month love and hate affair. I got through it, and it's been out in publication about 4 months now. So it's a very recent book. And I'd like to add on to what we were talking about in the 2008 financial crisis, because I think this is critical to everybody's thinking. People don't learn lessons very well. And what I mean by that is everything that was wrong in the 2008 financial crisis is as bad as it was then and worse. The debt is bigger than it's ever been. The derivatives exposure is bigger than it's ever been. And we have less diversification, meaning there are not as many money center banks as there were back in 2008. So we really haven't learned what we went through in 2008. Some would argue that we really haven't had that strong a recovery. And we're in a setup mode right now where even the BIS that I mentioned earlier in the show is of the idea that the next time, and they were indicating there will be a next time, we have a financial comeuppance, that the methodologies that were used in 2008 will not work. So let me go a little deeper, because this is important. And there are people that will argue with me, and that's fine. I'll stand my ground on this one. Basically, the idea is that if all else fails, the government will come to the rescue. But no one considers that governments fail. And I can prove governments fail, because all you have to do is go look at that movie, the Four Horsemen film, and look at my part in that movie. And I talk about the Roman Empire and what happened at the end. In a true republic, it is an individual liberty and everyone is under the rule of law. So all of us are equal at law. No one is superior to anyone else under the law. But at the end, and that was the beginning of it, and you want a silver denarius, you got honest money. As the deterioration of the currency took place, and they started putting dross into the coinage, the moral structure of society degraded right along with it until you got to the end, where the senators were not representing the people at all. All they were doing was carving out what was left of the spoils of the Roman Empire, and the empire did fall. In other words, the government did fall and fail. So the idea is that governments come and go, that the experiment that we have had in the country of the United States of America was something so profound and so different, where the individual had the highest ranking. You could never get above citizen. A president works for the citizenry. A Senate represents the citizenry. A representative is a representative of the citizenry, and a citizen was the highest form allowed at law. But we've forgotten these principles, and we have come back to what I argue something close to what the Roman Empire was. So my argument is that governments do fail, monetary systems do fail, and if you have a corrupt system, you're going to have corruption that was so pervasive that at some point people are not going to trust it. And that's the tipping point. When enough people, and it doesn't have to be the majority by a long shot, it can be 3 or 4%, will be enough to tip the scales. And that, I think, is the direction that we're heading. Can we head it off? Yes. But we have to have people that are willing to stand up and speak meaningful truths to people that will listen, and then there must be action taken. The only way to satisfy this is to take action. The root word satisfaction has action in it, because that's how it's derived. If you don't get off your butt and do something worthwhile, and it doesn't mean anything negative, it doesn't mean anything physical. It means as much as, picking up the phone, talking to senators, even though they don't listen, or getting and talking to your neighbors, or making, and I love Gandhi, and I'm digressing here, but be the change you want to be. Be willing to stand up for things that mean something to you, because if it's more important what brand of cell phone you have than what education your kids get, or what kind of products are in the food supply, or how clean the water is, then you basically have the wrong set, in my strong opinion, of what's really important in your life. And again, I think we're going to come back to that, and it's going to be a forced issue. I think it's really going to be forced upon people. They're going to have to make a decision. So you should start thinking about these things now.
Great stuff, David.
Yeah, I think this is, you talk about, this is an American problem. This is not a Democrat or a Republican problem. I mean, I've grown up big fan of Ronald Reagan, but the more I study, I was watching Jimmy Carter's nomination when he was running against Reagan, and he said these aren't regular Republicans. They're talking about debt style, and we're not doing that anymore. And we have to look in 2000, it was, as Republicans, it was the Republicans that started using debt. So this is not just one party, issue. It's a whole American system.
Yeah, and if you go into what I call the American system, basically it's capital formation, which is what the Austrians teach. So it isn't a debt-based system. It's the idea that Steve and Dave and 10 other people decide that David Morgan has a great idea to make a new automobile. We pool our capital together from our savings, and we build this automobile, and we all work hard. We might put sweat equity and capital together and make this car, and it becomes a success. And the free market says, I want that car. That car, not only does it look cool, but that car gets 40 miles to the gallon. It has no pollution. It's quiet, whatever it is. And that's the free market capitalism that I'm talking about. But we've come such a far away from the American system where you actually pool your capital from savings, and that's what builds something new, innovative, and the market determines whether it's needed or wanted. But those days are long behind us. It's now basically a debt-based system, as Steve has said so many times, and Dave, you pointed out during the show many times. And this is a system that basically is run by crony capitalism, which it's called often. And this is a bunch of good old boys that decide who gets the money and who doesn't, and they make created out of thin air. And this is something that has always led to the currency supply going to its intrinsic value of zero. Will it go to zero in the American system? I doubt it. But remember, from the 1913 mandate of the Federal Reserve System to right now, their own data shows that a $1 bill worth 100 cents in 1913 is now worth 4 cents.
Wow. It is true. Corporate welfare. I even heard Rush Limbaugh 2 weeks ago talk about why are these corporations that are making so much money trying to get after money in the budget, and the American people's not getting the money. Well,
I think that was the biggest mistake in the 2008 financial crisis, is that the banks were bailed out and the public wasn't, and the ability for the people to get money or loans from the system were cut off, whereas the problem with the system going into it was that everybody that could fog a mirror was given a loan for a home. So they basically went from one extreme to the other extreme, and we haven't really recovered from that. The banks are liquid, and as an Austrian, I have to say there's been inflation, and there has, but all the inflation has not gone to Main Street. It's all on Wall Street, and that's why you see the stock bubble that you see now. But as far as really being helpful to revamping the infrastructure across the country, maybe having new transportation systems, more education. All the stuff that we think as a collective, and I'm not a collectivist, believe me, I'm very, very different, but doesn't mean community. I define them differently. I don't want to get into that argument. The point being is none of that money, whether you're, Republican, Democrat, Libertarian, I don't care what you are, none of that money for all practical purposes made it to the people at all. So what are we? Are we just sitting there looking at our politicians, our rulers? These people are not leading anything. They're ruling over us. They're acting as if we're children. They're our mother and father, and they tell us what to do, and we don't even get a voice in the system anymore. And that whole thing is upside down from the way it's supposed to be. Remember, as I said earlier, a citizen was the top of the chain, not the bottom. And now, of course, we're just looked at as pawns in their game.
I think the term is called elitism, isn't it?
Wow, David, thank you. I appreciate you being on the show today.
It's great to be with you. Thanks for the opportunity.
You betcha. And this has been a wonderful conversation we've had today. And if you'd like to learn more, make sure that you go to our website. That's www.smartwealthradio.com. You can listen to the archive of today's show, and we'll even have some extras on there. Our conversation continued beyond what we could share just here in the studio today, and so we've recorded some information for you to listen to as well. So thank you again. We look forward to being with our audience again next weekend.
The information contained herein is not intended to be and shall not constitute an offer to sell, nor the solicitation of any offer to buy any security. Content is provided for information purposes only and is not to be treated as advice to make any specific investment. Please consult with an independent investment advisor before making an investment decision.